The first homeowners grant in Queensland. Is it going to still be available next year? Can you still get it now? We're going to answer all these questions and more in this video. So Nathan, starting from the top, is the first homeowners grant still available in Queensland?
The first homeowners grant is still 100% available. It's for brand new purchases, whether it be construction or off-the-plan purchases. And at the moment, it's $15,000, which the government will give you for purchasing a brand new property or constructing.
Yeah, so the only caveat is it's not available on existing homes. So if the property's been lived in before, if it's a houseboat, if it's a car boat, you can't do it basically. But if it's a brand newly constructed home that no one's ever lived in before, or if it's a vacant block of land that you're going to build on yourself, you got 15 grand from the government.
And one quick tip for those that are building their mansion, it can't be over $750,000 in total value, whether it be build or purchase. So just remember that one there. For those of you that remember, the first homeowners grant used to be $20,000. Now, it recently changed in the middle of this year,
in
2018. So Jaden, what happened? Why did it reduce?
So the government reviews the first homeowners grant every year. And in Queensland last year, they decided to reduce it from $20,000 to $15,000. But the good news is, if, I don't know, say you signed a contract before June 30, 2018, or you signed a build contract before June 30, 2018, you can still claim the $20,000 first homeowners grant. You've got a couple of years actually after even you've moved into a brand new home, as long as you've got all the documentation together to claim the first homeowners grant. But unfortunately, if you didn't sign a contract before then, you're only eligible for the $15,000 first homeowners grant. So Nathan, what are the rules in applying for the first homeowners grant? What makes you eligible? What makes you ineligible?
Firstly, you've got to be over 18 years old.
No babies getting it.
And also, the other thing to remember is if your partner or yourself have ever owned property before, it automatically disqualifies you from owning or receiving the first homeowners grant.
And that's also owning in your personal name. So there can be some tricky complexities here if you've owned property in companies before and investment properties. If that's the case, it's best to talk to the Queensland Office of State Revenue and clarify if you're eligible for the first homeowners grant or not.
There's plenty of calculators online as well, so if you do want to check your eligibility, jump online. We've got a link in our website that will give you an idea if you qualify or not.
And the last thing to make sure that you're eligible for the first homeowners grant is that you actually have to live in the property. So there's an actual rule as a part of the grant that you need to move in within the first 12 months of owning the property and live in it for at least 6 months to qualify for the first homeowners grant. Now there's a bit of a complexity here and a bit of a trick that you might not actually know. As a first home buyer, you get some concessions on stamp duty too and transfer duty. There's a weird thing here, Nathan. I don't know if you knew, I only found this out when I started researching this stuff, that to get the first home ownership stamp duty concession, so you get cheaper stamp duty because it's your first home, you actually have to live in the place for 12 months. So not just 6 months. So it's really weird there where to get the first homeowners grant, to get 15 grand, you've got to live in there for 6 months. But to get the stamp duty concession as well, you've got to live in it for 12 months. So there's all this stuff that's really weird. You've got to check it out. And again, just be really careful because they can actually take the first homeowners grant away from you. Another really weird eligibility thing that I found out is with the first home owners grant, you can actually rent out a room in your house, which is really cool. So you can move in there, rent out a room to a mate and make some money. As long as you're living there as your primary place of residence, you're sweet. But if you get the concession, the stamp duty concession, you're not allowed to rent any rooms out in that house. You can't make any income from it. So there's all these weird things in there that if you're not sure, call the Office of State Revenue, because I've had cases and I've seen clients where the Office of State Revenue have actually taken that money back. So they rented out a room, they thought they were really clever, they said they'd move out and get their post sent there and that was all good. And the government came knocking on their door and asked them for their money back. So just really be really careful, be mindful of it. You know, it's free money, but there's a few terms and conditions that you really want to check out and make sure you don't get caught out. So Nathan, can the first homeowners grant be used as a deposit?
It can. So the $15,000 can be utilized towards your deposit when used to purchase a house. So what that means is if you're falling short on funds available, the first homeowners grant, use it, count it towards the purchase deposit.
Now the only tough thing here is it usually isn't enough to form your full deposit. Unless you're buying like a tiny unit in somewhere in Brisbane or Queensland that's under say $300,000, it's pretty rare that the whole first homeowners grant will be enough to make up your deposit. So like we said in other videos, you usually need to aim for about between 8 to 10% of the purchase price in savings and deposit. But like Nathan said, if you're buying something for $400,000, you need $40,000 in savings. You've already got 15 grand, so you're more than halfway there. Well, almost halfway there anyway.
So Jaden, when do I get paid my first homeowner's grant?
Dollar bill. You get paid depending on what you're buying. So if you're buying a brand new apartment or townhouse that's been completed, you can get paid the first homeowner's grant on settlement of that property. So the good thing is it can go towards your bank deposit and you get that money right away. But if you're building a home or you're buying land, you don't get the first homeowner's grant straight away. It's a bit of a tricky one. So if you're buying a house and land, for example, you have to buy the land, you have to settle the land, you get no money. You need to then get a builder. The builder starts, the builder will put the slab down, and at that stage, generally you can get your first homeowner's grant released and it can go towards the build cost. So it can be a bit tricky. You've got to have, like we said a little bit earlier, a bit more deposit saved up because you can't entirely rely on that 100% for your deposit.
And lastly, Jaden, tell me, how do I apply for the first homeowner's grant? Do I go to the Office of State Revenue Direct? Does a bank help me? Do you help me? How does it all work?
Have you ever been to a government agency?
I can't imagine how hard it would be if you went to the Office of State Revenue.
Don't do that. So there's a couple of forms online. Like Nathan said earlier, we've got an eligibility test. You can download the forms from our website to check it out. It's pretty simple. There's 7 or 8 sections on the form. It's 15 pages. The section 1 has the personal name, your details. It has eligibility questions. So if you've owned the property before, if the property's worth over $750,000, you can't get it. You've got to fill that out. It has a section on the property's details. It's got all that basic government formy stuff. The good thing is, if you apply for a home loan through Hunter Galloway, we actually help you complete that form because we have a lot of that information already there. So it can actually be not too hard. You just need the form and then some other supporting documents, stuff like your ID. You need to show evidence of the property, the contract of sale. You might need to get a certificate from the property developer or the person that built the property saying that it's never been lived in before. There's a few other things there that just depend on your situation. So if you want more information on this, check out our website at huntergalloway.com.au. Definitely check out that eligibility tool. It's actually pretty handy and I think you can find it pretty useful. And if you've got any questions, make sure you hit us up or leave a comment below. Thanks, guys.